somebody is, okay, yeah, you've been traveling for a while. I can see you've been traveling for a few years. And you're thinking of giving up your US citizenship. So it's a particularly US question. Now, and again, we at HTJ.tax, if you go to /events, we do live streams every week. And there are live streams particularly dealing with US exposed clients. And just like we have live streams that particularly focus on Indonesia or Australia or Portugal or Spain or whatever. So this is something we'll probably get into in the US one, but just generally speaking, if you can give up your US passport or green card, if you are green card holders, you can give up your US tax status, right? First of all, you need to have another, assuming you're a citizen, right? You need to have another citizenship lined up. And you need to make sure that the last 5 years of your tax returns are in order. So, I know you've been traveling already. So, make sure all your worldwide income has been properly reported. The companies that you've been working with or through have been reported as well. The foreign bank accounts, any other structures that you may have. Full disclosure, because with the US, it seems counterintuitive. You may think, hey, tax offices just want their money. The new goal isn't necessarily money. The new goal is information, as you're probably aware. So a lot of the tax reporting, particularly to the US, is geared around getting as much information as possible on you as a taxpayer. So, and we know this is super important because the penalties for not reporting certain investments or financial holdings are way more than the penalties for not paying some tax, right? It's disproportional, civil and criminal penalties thrown in. So sometimes it can be pretty draconian. So that's how we know that's a clear message from the authorities that, hey, information is what we're after. So make sure all those information returns are done for the last 5 years. So I don't know, you didn't say where it is you're resident, but you need to check for the nearest US embassy. You can probably make an appointment online. You go in, you go to the relevant section and say, hey, I want to give up my US citizenship. They may ask, are you sure? You say yes. Some of them will deal with you on the spot. Some of them give you a cooling off period, come back and take a second appointment. Especially before COVID, they used to do that a lot. Now they kind of deal with you on the spot once you get in, right? So, basically you get a CLN, a certificate of loss of nationality. And you sign up for the paperwork and it goes to DC. But it's whenever it's approved in DC, it's backdated to the date at which you signed it at the embassy. So that's your effective date, right? So that's a process from an immigration perspective. From a tax perspective, again, I said that you need to make sure you're clean and clear for the last 5 years. You may be subject to an exit tax. So how does the exit tax work? It's 3 ways in which it's triggered, but most people focus on 2 ways in which it's triggered, which will be if your net assets in excess of $2 million. Which gets to be pretty easy, right? You have a decent house and you probably have crossed 2 million. So it's a relatively low threshold, but it is what it is. So if it is, that's one way, net assets. So you get to deduct your debt. So like mortgages and stuff, but net assets over 2 million. The other way is if your average tax bill for the past, let's say 3 or 5 years has been more than a certain amount, and that amount goes up with inflation. But let's say if it's more than $165,000, $170,000, your tax bill for the past few years, then you may want to look at that more carefully because it seems as if you may be a covered expat. Now, if you're not a covered expat, then you've had an appointment at the embassy on October 27, 2022. You sign off all the documents. In 2023, when you're working with your tax team to do your 2022 returns, you'll do a dual status return. Dual status being you hold 2 status for the year. For part of the year up until October, you were a U.S. person. And from the end of October to the end of December, you were not a U.S. person. So you file something called a dual status return together with a Form 8854, which I like to put as the goodbye return because your way of communicating to the IRS, hey, this is my last return as a U.S. person. I'm out. So there's typically no exit tax calculation if you were not a covered expat. If you were to be a covered expat, as explained earlier, there'll be an exit tax calculation, which assumes, keep it simple because it could be kind of nuanced because like the deferred tax liabilities. So if very, very simple, it assumes that you liquidate everything as of the date of your expatriation. And that gain, that capital gains, that deemed gains, that's going to be taxed at your capital gains rate. So that's basically how it works. So that's what you're looking at. If it is you want to give up your citizenship, of course, we would advise not just to jump in, get proper advice, get planning, because there may be some pre-expatriation planning, which can help you optimize your tax position before you make such a big decision. Hope that helps.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.